Hello, this is Cryptolyze. I hope you are well. This Wednesday, September 5, 2023, it is with pleasure that I meet with you today to talk about Ethereum and its token, ETH. So as usual, we are going to dissect a fundamental part into two parts in which we will come back to what Ethereum is, its news, what is happening at the chain level, and then we will head towards the technical part to project short, medium, long-term overall purchase prices, sales prices. We see it all together and it starts right away. If we consider that BTC is the king, we can very well consider that Ethereum is the queen. Clearly, in terms of cryptos, Ethereum is the one that made it possible to bring programmability to blockchains. Clearly, it was she who invented the notion of programmable money. This is really how it is defined, thanks mainly to its language, which is Solidity, in which she invented smart contracts. So yes, Bitcoin is programmable, but it is not incommensurable when we look at the possibilities allowed by Ethereum. And precisely this is the very principle of Ethereum. It is thanks to Ethereum that we have the notion of smart contract, therefore this notion of programmability. It is thanks to Ethereum that we have decentralized finance. It is thanks to Ethereum that we have NFTs, for example, or solvent tokens, which are functional bits that make it possible to build smart contracts, therefore intelligent contracts, intelligent pieces of code, which are more and more complex and which make it possible to bring pure and hard utility to the entire ecosystem and overall blockchains. This is the very principle. This is what made it possible to have the advent of decentralized finance in the years 2020 minus 2021, and which led to the bull run of precisely that era, in which we find the appearance of NFTs, the appearance solvent token, which enabled the advent of this whole part. When we talk about Ethereum, we have to talk about this notion of scalability. For what? Because when we talk about Ethereum, we also talk on the previous bull run about having fees of $150, 150 euros, or even 200 in certain cases just to do a swap. So just to exchange one crypto for another, or even simple shipments were around $80. So something which was really important and which was very expensive, which allowed us to have the growth. Many other blockchains which were set up precisely to counterbalance Ethereum and which positioned themselves as being an Ethereum killer. In fact, what happened, what ended up as consensus, is that Ethereum became the default protocol, a bit like the authentic protocol, in which we now define the notion of EVM compatible, EVM being Ethereum virtual machine, therefore implying the technical layer which allows smart contracts to be executed in Solidity, the language of Ethereum has truly become the standard. We have a few projects that are gravitating around it, but that doesn't mean that the bulk of the volume and the bulk of the developments are on everything that is Ethereum compatible and on Ethereum. Behind, we had the launch of the notion of layer 2, namely that this notion of scalability is problematic. We know it. That is to say that Ethereum has a very limited number of transactions per second, in which obviously when you want to have a use, widespread use of blockchains will cause concern and will lead to an increase in costs. There were two possibilities. Either there was an increase in the scalability of Ethereum, or alongside the construction of what we now call layers 2, layers 3, which are layers on top of Ethereum, which use the security of Ethereum, but which opens up the possibility of having thousands and thousands of transactions. We have to see this as being a form of funnel in which we will have, the more we move towards the upper part, a significant number of transactions. And the more we move towards the lower layer, therefore layer 0, the more we will have a concentration of these transactions. And that's why we're now talking about rollups, which are the technologies that are mainly used to scale Ethereum. We are going to have the zero knowledge proof ZK rollups, which allow us to have, with a mathematical proof, the validation of a large number of transactions on Ethereum at low cost. And we are going to see the Optimist rollups, which are still a separate diagram. But overall, we have an ecosystem that is being built on top of the theorems to be able to evolve the chain. And next to it, we have the blockchain itself, which evolves over time. We had the merge in which we went from proof of work to proof of stake. A year ago, give or take a few days, which is rather positive. I will come back a little later in terms of tokenomics. And then we have other things that are being prepared with updates, which will offer scalability within Ethereum, because we must understand that the ZK rollup at the Ethereum base was not made to be able to, in fact, have layers 2. So the management of pure data was not made to be able to structure it in this way. And the update, which is in preparation and which should arrive, will allow us to have a colossal reduction in costs in terms of rollups, and which will precisely allow us to have an increase in the number of rollup transactions. So I think that we're going to have something that will be very strong, not necessarily in terms of the land, but in terms of the different rollups, and therefore a reduction in their operating costs. So I talked to you about the merge because it's an important level. We moved to proof of stake, which led to a lot of things. One, the fact that Ethereum has now become something which is disinflationary, which is truly disinflationary. We see that despite the fact that we have very few transactions, we have reduced the max supply of Ethereum by less 0.26%. So over a year, overall a little less than a year, almost a year, soon the celebration of the merge. So we are in something that is deflationary. So yes, but you have to understand that this is only the case when there is an increase in transactions. A good example would be to look here at 30 days in which we had a month of August, in which we had very, very little volatility, very few transactions. What happened? We had an increase in max supply because we had very little utility at the level of Ethereum. So obviously we will have a max supply of Ethereum which will fluctuate depending on the number of transactions. So we also have to understand behind that there are quite a few things. That means that if we arrive in a mode of scalability, that implies that we will have a reduction in the number of transactions on Ethereum, therefore a reduction deflation, which is true, except that it will necessarily be compensated by an increase in the scalability of other blockchains. The more scalable it is, the more transactions we will have, the more transactions we will have, the more transactions we will therefore also have on Ethereum, which is logical. So I think we will arrive at a form of balance fairly quickly. For me, I am aiming for a maxi supply in the region of 100 million Ether. In terms of stacking, it's very important thanks to the update of proof of stake in Chapella. We had the possibility here of being able to deposit. This is always the case, but above all, to remove them and also remove the stacking rewards that we had. What is interesting to see is that this has made it possible to have an increase in the number of ethers which are locked. So we can very clearly see this curve in purple, which has only been growing since the update which took place, found here, and that we have a decrease in the number of withdrawals, an increase in the number of deposits. This means that there are more and more ethers being stacked, more and more investors who are confident and who are investing. We are more than 22% of all Ethereum which is locked in the validators, which is rather positive. And we see that in terms of validation, we are also something which is rather decentralized compared to what we were afraid not long ago. And in all cases, there are modifications that are happening, whether with the extraction account or especially decentralized validation. There are plenty of projects that are underway. So they will make it possible to adjust precisely this part with the same ease. So on the other hand, Ethereum, here we arrive at this notion, which is one of the fears around Ethereum, is that the project itself becomes more and more complex, becomes more and more slow, in fact, to develop, increasingly slower to evolve, because it is complex, because it has a huge amount of cash and TVL, total value log, therefore money which is blocked on the protocol. So there are really issues, which are very important. And the more important we have at stake, the more at that point we will have a development that will be long, which will be filled with precautions to avoid making an error. And precisely, some players accuse this slowness and switch to protocols which are simpler and more scalable, such as, for example, the Cosmos SDK, therefore the Cosmos environment, which allows you to develop your own app chain in order to be able to build it. And this is where we ask ourselves the question of evolution. Yes, is the goal of Ethereum to be the default protocol? At that point, won't it be something that will be too slow to develop and that will block the evolution of blockchains? That's kind of the idea. Will Ethereum be able to keep this pace of evolution and even accelerate this pace of evolution by keeping the notion of protecting its ecosystem? For me, this is really the big challenge of the next 5-6 years in terms of Ethereum. So that being said, we have completed the fundamental part. We are going to attack the technical part, which develops really very easily through heliotist waves, where we have a wave 1, a wave 2, 3, 4, completed from suddenly in June, and we finish the 5 in November 2021. In which we have a classic retracement in ABC. So we are really in a classic dynamic of heliotist waves, in which we will find several elements once we have finished. Here we have what we call a Wyckoff reaccumulation, which is through a Wyckoff distribution. The reaccumulation is found here, the beginning, with a BC-ARST. The ST has taken the liquidity of the BC, so we are indeed in a reaccumulation of Wyckoff, and we are next in a distribution in BC-ARST. So this implies that in all cases, in both diagrams, we will be on a new ATH with behind a liquidity gain of the ATH existing. We will discuss it a little later. In all cases, we are currently in the sign of weakness, therefore, which is the long-term accumulation zone that we generally always find in reaccumulations and in Wyckoff distributions. So we are here in this pattern, which is more of a form of range. I think we have found an upper limit here, and I think we are on the lower limit here, and in which we will oscillate with here a selling climax in ST, so SC, STR, so something that is classic. With bearish latency, we retrace, we retest, and what we will wait for is ideally either a new retest or a liquidity take with an STB. Okay, the STB and the spring are not obligatory, but it must be taken into consideration in view of the evolution of the course. For what? Because currently when we look at the state of the curves, it is not positive. When we look and compare Ethereum compared to BTC, we see that here we broke the previous lot while BTC held up well. This is rather problematic in the sense that we have a pattern that is setting up here with lower and lower highs and lower lows. So we have a short-term bearish dynamic that is in progress. To decide, what we will have to see is whether we take the liquidity or not from this lot, which is very important, which is precisely the lot of 1,368. If we manage to maintain this, it will be rather positive. I tend to say that it is imperative that on a weekly basis we close above this level to say that we can hold on in the long term. For me, we are really here working on a resistance zone in which we also have the 0.5 of Fibonacci of the movement, of the last movement, this movement which is being made, which corresponds to elsewhere. I didn't draw it, but we're going to take this one and we're going to remove it. You'll see, gap. We see that we are on the 0.5 part, but we have not yet arrived there, okay, on the total movement. This is why I think that the movement itself is not finished. We are more in a first phase in which we will have a second phase, which is coherent in relation to the analysis that I have at level of BTC, where we will potentially look for the 22 zeros on BTC, and therefore on Ethereum potentially look for here 0.786, the 1.3, in which we have this reaccumulation here with a bullish break, and therefore we will retest this bullish break and fill here this imbalance, which would seem to me to be completely coherent or even a little more aggressive to go for the 1,250 with a level which would be in this zone there. This is for the purchasing zones. In all cases, what we will have to wait for is a break in this part in which we must create a break pattern. For that, it will be precisely revitalized by having a break here, a high, to then structure the lower part and start again upwards. There we will have an interesting signal to tell ourselves that we are indeed going to start rising again. So what can we have as a target in mind? The first things will necessarily be to go here to liquidate the 3,600, in which it is certain that we will have a sell-off, which will be carried out. For what? Because a lot of people are stuck in this area. A lot of people are locked here and have been in negative ever since. We know that the average price of ethers which are locked and in the vicinity of 2,000 minus 2,100, so many people are in negative and are waiting for added value. And it is certain that when we arrive somewhere with already a 50%, there are some of the people who are going to make a withdrawal to be able to liquidate. So there we will certainly have enough supply. And then we will go and look for a new ETH to fetch for me a big vacancy, a big wave 2 with a 1.618 objective. First objective, which seems coherent to me with 8.687 at the end of a bull run in which we would suddenly have an influx of utility, the establishment of an Ethereum as really being the default protocol. And there at this point, I think we will take a value higher than the level of Ethereum and look for a target which will be higher with the 618, therefore the upper level of the Fibonacci ratio, therefore higher ratio linked to the number of golden number 1, 618. So we would go for the 13,500. So really a significant valuation of Ethereum linked quite simply to the growing utility that it will have and to a concentration of its value at mainly through burning and reduction of max supply. So that, for me, is a perimeter on a bull run. You understood if there is no transaction, there is no reduction in the max supply. If there is no reduction in the max supply, it is as much as we have no concentration of value and we have no use of the blockchain. So for me, everything is linked and we will have to wait for a return of liquidity. And why not have an additional narrative arc, which is grafted around the theorems that we were able to see with NFTs, in which we will be able to have an additional valuation of Ethereum as a default protocol. I hope you liked this video. If so, I'm sure you will appreciate the one I made on AVAX, the Avalanche crypto, in which we are in a moment of bloodbath. We're not going to hide it. I'll put the link here. We'll see you tomorrow at 7 o'clock for a new video.